Hello and welcome to my channel Personal Finance Logics. Today we will be talking about stocks and how to invest in them to get maximum results. Stocks are scary and there is a lot of misinformation about them. Lot of technical terms and difficult situations with lots of numbers. Today it's time to say goodbye to all such things. We will show you a completely self-reliant 8-point guidelines that will help you make your decision about investing in stocks. So if you want to invest in stocks, consider these 8 things and then go ahead. Start your money-making journey. Number 1. Set your investment goal. What are you looking for through this investment? Yes, make money, but do you want to make money in the shortest possible time for some expense at hand? Or do you want to make money that can come a few months down the line but will be higher in value? No one can answer this question but you. You have to answer and set a realistic goal because that will determine your timeline of investment. Long-term growth or income or both the things at the same time? Your answer will determine your investment strategy. Whatever is your answer to this question, just note it down till you have answers for all the questions from this video. Number 2. Research, and research. Do your research. That's the second most important thing. You have set your goal, quick income or long-term growth, the decision has been made. Now start your research into companies, their profiles and recent performance. Things to look for would be, analyze companies' financials, shortlist companies or pick up a random company of your choice. Do some basic financial analysis of the companies you selected. Try to find answers to some basic questions when you look at data for the past couple of years at least. What sort of financial stability do you see? Are there serious fluctuations in the financial history? Can you identify steady trends in the financials? Look at these 3 statements. Income statement, balance sheet, and statement of cash flows. At the end, you have to categorize the performance of the company. What is the debt-wise situation of the company? What is the quality of the management? Good or bad? The judgment will be yours, but now you know the right questions to ask. Competitive position of the company. How has the company been performing against the competitors? And how is the company performing now? The financial and other homework that you did according to the previous guideline, compare it with performance of other similar companies. Have a comparison table on your laptop or desktop or just make a simple one with hand. Industry trends. See how the industry or the sector in general is performing. A few companies may be doing very good and a couple of others may be doing great, but what is the overall situation of the sector? Is the sector growing or growth of the sector is becoming negative? Investment in good performing company in a bad sector may be profitable in very short term, but for long-term growth it will be a bad investment. So analyze the industry trends. Here are the 10 fastest growing industries in USA by revenue growth in 2023. Peer-to-peer lending platforms, CBD product manufacturing, investment banking and securities intermediation, subprime auto loans, 3D printing and rapid prototyping services, solar power, international airlines, tour operators, 3D printer manufacturing, unmanned aerial vehicle manufacturing. Forbes has extensively published on the importance of research. You can do research on growth stocks, value stocks, and dividend stocks to find the best option suited to your investment goal. Number 3. Diversify your portfolio. At a third guideline, select more companies from different sectors. Diversification of portfolio is needed, so diversify your investment across industries, different sectors, and regions. This is about creating a safety net which results in minimizing risk. Uncertainty is a constant factor of stock market, so all the investment that you're going to make needs to be secured. An excellent way to do it is to diversify. Do your research well and select different companies to invest in. Investopedia.com has highlighted the need of portfolio management and has further presented the value of hiring portfolio managers. Even small investment can be diversified. Just do your research well and then invest. Number 4. Assess your risk tolerance. Every investment choice comes with a risk, and you should know it best. The investment portfolio that you devise should give you a fair idea about the kind of risks involved. What are your safest stocks and which ones are the most risky? Do the basic math and now you can proceed to determine your risk tolerance. A simple equation to further explain the question is, risk appetite plus risk tolerance equals risk profile. Corporate Finance Institute has established that risk tolerance levels drive investment patterns. It's how much risk do you want to take for maximizing your profit and the capacity you have to absorb loss. Answer these two and you will have your risk profile. Number 5. Make a solid start. Solid foundation of your investment and a solid start. That's what you need to do at this stage. Consider investing in at least one established and well-known company that has a history of consistent performance. Normally and technically referred to as blue-chip stocks can be a solid start for you. Just see that how much of your money can you invest in blue-chip stocks and then diversify for investing in other stocks. US News has recommended the following 10 best blue-chip stocks to buy for 2023. Walmart Incorporated, Chevron Corp., Procter & Gamble Company, Johnson & Johnson, Coca-Cola Company, McDonald's Corp., Goldman Sachs Group Incorporated, Microsoft Corp., Travelers Cons Incorporated, Visa Incorporated. Number 6. Stay informed. Sixth thing to do in our guideline is to stay informed. Don't just lie low and forget about stocks after your initial research. You need to stay informed, and for that you have to make a schedule for acquiring and keeping information. Technology has made it easy for us all. Just keep a track of your investment and get the stock market information delivered to your phone or laptop regularly, and by that I mean stay updated on a daily basis. You can run a weekly check on sectoral performance and company development. If there is an unusual development, you should be able to get this kind of information. In case of any unusual economic situation or upset in the market, you should be able to quickly make adjustments regarding your investments. One thing you should avoid at all such times is showing knee-jerk reactions. Not all market fluctuations require drastic decisions. Make your decision with a cool head and think of your investment goal at this point. Number 7. Be patient. Well, last two things on our guideline are being patient and disciplined. Stick to your investment strategy and avoid emotional decision making. Don't let fear or greed drive your investment choices. You do have a plan in place, so follow it consistently. Don't get distracted by what others are doing or making. Remember that they have a different goal and a different investment portfolio, so it's like comparing oranges and apples. Be patient. Number 8. Exercise discipline. Investing in stocks takes time and discipline, so don't expect overnight riches or get discouraged by short-term setbacks. Stay focused on your long-term goals and practice financial discipline. Don't pull out of investment for the sake of some short-term need that you can easily manage otherwise. Questions to be answered here are: do I really need to spend on this? Can I make this expense at some later time? Can this situation be handled otherwise? Give realistic answers and stay focused on your goals. Conclusion. According to Fox Business, 28% of the Americans after COVID-19 favor the stock market for investment. These were our 8 guidelines to help you make investment decision in stocks. If you are still unsure and need more advice, it's always a good idea to consult with a financial advisor or professional on your specific financial situation and goals.